Good morning, traders. Welcome to the TMT Stock Market Strategy video for Friday, February 17th. Guys, things are really starting to shape up here. We talked about this in our previous videos, how we have two scenarios to play out, and we see that a market has been forming a top. Haven't officially called the top yet, but I'm really getting close to it. Yesterday was really the first day that the markets were down, so for the novice guys, you're not going to call a top right off the bat, especially when you need more evidence. I want to see some more volume. I want to see a little bit more fear come into the markets to the downside. Pullbacks usually form corrections, and especially now where we are, a very overvalued market, overbought market. Now, we all know that overbought is not a sell signal, but when you have RSI, and I'd like you to do this today if you want, grab yourself a chart, throw the MACD RSI, but most importantly an RSI, Relative Strength Index, and look at where a lot of the market drivers, stocks with the market drivers, and I mean the influential stocks that move the market, such as the Apples, if you will, the Googles and whatever. But, Apple, case in point, has, I believe, a 90% reading in the RSI. It's ridiculous that people would buy Apple here because of an analyst saying that Apple's going to the moon. I mean, do your own homework. Do not listen to these idiots, because all they do is they get paid. Remember, guys, Apple beats, they upgrade it the next day. Apple misses, they downgrade it the next day. Or they say they have a hold rating. What good is that to you based on your portfolio? Shouldn't you be saying, I want to buy Apple they're going to beat, and I want to buy Apple before the earnings? I mean, that's really what should be happening. There's the value, not after the event happens. It's ridiculous. So remember, do your own analysis. Don't listen to me. Listen to yourself. Make sure you, if you are listening to anybody, do your homework and make sure that the analysis lines up to what you're looking at. And then that's a little different, Just keep that in mind, guys, because everybody out here is a bull. And remember, most new managers, and this is where it's going to get interesting when the markets sell off, most new managers, analysts, technicians that started from 2009 don't know anything other than buy the dip, okay? They don't know when the market has turned, and there's a lot of fear in the markets. They don't know. Yes, there have been a couple of blips down, like last January, but they don't know how to protect portfolios. They don't know how to reduce positions, reduce risk, margin of equity. There's a lot of caveats out there that a lot of these new managers and traders have no idea when this market starts to turn and how it's going to turn and how violent it's going to be. So just keep that in mind. That's why I say don't listen to anybody. Do not listen to anybody but yourself. All right. We have the two scenarios that played out. We'll go over them in the spider charts, but let's just go through these charts up front here. Dollar is starting to pull back yet again. We did have that nice move higher, but then we failed right around the 26.16. So again, it's chopping around, backing and filling. We did fill this gap here, which was major support, and then now we're just kind of hovering around here. So I'm not liking the fact the way the RSI is starting to roll back over here on a daily chart. We do have a nice distribution candle yesterday. So again, could this be the top here? What it does look like to me, and I wanted to point this out to you guys today, and I'll do this with the big marker, is a head and shoulders pattern. Here is your head, here's your left shoulder, here's your right shoulder, and then here's your neckline, slanted neckline, which comes clearly identifiable. So if this pattern does play out, you're going to have a dollar move lower, and what's going to happen? The commodity is going to rise, and that's going to help gold. And if we get additional fear in the markets, that's going to be the gold buying area, and we're going to show that to you next. So we're watching the dollar and see if this head and shoulders possibly will play out. I'll mark it over the weekend and show it to you guys. We'll put it back on the charts, but I just want to show that to you here. It looks like this corrective move is turning into more of a corrective move than more of a full-blown second wave now, going higher. Now, I do believe that we are in a second stage bull market, and within these waves are mini waves. To me, this was corrective. Here's the higher low from the previous low. We have another higher low from this low to this low. But I got to be careful, because I want to tell you guys, gold always gets everybody one-sided, washes everybody out just to go back and resume the trend. Okay, so commitment to trade reports, not much to say other than the producers are not heavily short. That's a good sign. but I want to just keep an eye. I want to watch this a little bit more before we start taking action here in gold. Same thing with the GDX. We do have a nice inverted head and shoulders pattern, okay, and we're above the neckline, flagging here, okay, which is beautiful. Exactly what you want to do is textbook. So let's see if this breaks out of the bull flag or starts to break down a little bit. Even if it did break down back into the zone area, this would still be the right shoulder. I'll be more inclined to buy down here than to buy up here for now, only because we do have a little uncertainty in the market. We don't know which way this market really is headed at the moment. TLT, 20-year ETF. We're just kind of chopping around here at this big area of support. As you can see our volume profiles here. Really kind of basing, but remember, basing is what this does. It bases and then breaks down, or it bases and breaks back up again like it did here. You can see that. But now we're just kind of sitting around. Remember, the USB weekly chart is sitting above the 200-week moving average of 148 and change. If we lose that to the downside, all bets are off, and then I think we're going to flush really hard in the bonds. But in the moment, rates are starting to rise, they're trickling up higher again. So there's really no trade here, guys. There's two, and let me just grab that. There's two swing high areas here. One here, one here. It needs to clearly clear that, or we're going to break down. All right. So you can see how it creates little channels and then breaks down or breaks up. We did it over here, right? And now we're doing it here, a larger one for 2 months. So your area is going to be 123.16 or 118.39, 119.40, call it. So that's a channel range. If you're nimble enough and you're a scalper, there you go. And if you're not, you're going to wait until one of these range is going to either break out to the upside or break down to the downside. Okay. Other than that, there's no trade in the TLT at the moment. Kind of quiet. All right. Now we get to the spiders. We had a move lower, and obviously the buyers are dips, and that's what they're prone to do. They keep buying the dip. Now remember, we have two scenarios that play out. All right. Let's get right to it. Here is the 60-minute. Well, by the way, let me show you what I mean by that. We have a grossly overbought market of just under 80. We tagged 80 in the RSI. Absolutely insane, and an overvalued market. There's no reason to buy stocks here to add to your portfolio of your long-term account. Absolutely no reason. The 21 EMA is at 230. You're about 5 points away from that, which is the lower end of this bearish rising wedge. Let the market come in and let the market tell you when it's ready. You want to buy when there's fear, and you want to sell when there's greed. And boy, do we have greed. And remember when I showed you the fear and greed index at CNN? Well, right now it tagged 80. All right, 80. So we're extreme greed right now. All right, and that's when you have to watch, because now all you need now is the one catalyst to push this market lower again. So here's our fifth wave, all right, and I made that as a question mark because we could be in minor subdivisions here. So we could have a fourth wave up. This is the fourth wave. Here we're on our fifth wave and last leg up. And remember our little time chart that we had here. And let me open this up. You could see that we get into somewhere around mid-March. And I think what's going to happen is this. And I like to plan these out, right? Remember, this is just planning. You're not really, this is nothing actionable at the moment. We have to see the pullback. We get a little tiny pullback here, right? Does the market go like this and just kind of hover along, right, with a little pullback, shallow pullbacks to get everybody long, and we tag 240, 238, okay? And then the market just dumps. All right, that's one scenario, okay? The other scenario is going to be is that the market gives us a 3 to 5% correction down to this 232 area, and then explodes higher and does the same thing, get everybody, all of the shorts cover, right? All of these perma-bears saying, forget it, I'm done, this is never going down, I've been fighting a losing battle. And then sure enough, they're the ones that fuel the fire to go higher, okay, and even much higher, 240, 242. And then at that point in time, somewhere around mid-March, we dump hard. Okay, that is what I'm looking at. Right now, we only had a one-day pullback, very shallow. They bought the dip late in the afternoon to really reduce their losses. So that already tells me that we'll probably ride the rail here at the upper end of this range. And of course, break out, come back and break out and stay above it or right in line with it, and then with little shallow pullbacks, okay? Remember, it's only one day. Let's see what happens this morning. We're down a little bit, about 5.5 handles in the ES in the Globex session. So I need more evidence to see what scenario is going to play out. And if that does play out, that the scenario plays, that we get down to, let's say, down here, that's when we got to look to buy the dip for another move up here. That'll be the corrective and last and final mini wave of the fifth wave, and then we dump. And that's what I'll be watching, and that's what I'll be telling you guys, okay? IWM, you can see weakest of the bunch, but it is holding in pretty strong. I like the IWM. I actually love the IWM trade long, not up here. Wouldn't even touch it. It would need to get way below. It would need to at least fill this gap down here. And here is our Pro Trader Premier video levels, by the way. This is just for free right now, just showing you guys certain levels off the daily. We do an intraday level chart for you guys, so you guys can trade off of when price reaches it, touches it. You can get long and short it. But we need to fill this gap here first before anything. And then there's another gap that needs to be filled here. So anywhere, believe it or not, I know it's a long way out, but believe me, there's still a lot of this year left. There's only a couple months into this new year. So I want to see this market pull in. And at one point in time, you start accumulating the IWM. Trump will eventually help the Russell 2000 for small business. Transports here had a little bit of a blip day, but nothing special. Remember, guys, yesterday was nothing great in the markets at all. Here's lastly is your Qs. Nice little small doji candle, indecision. Remember, indecision only works if you take out the high or the low, and that will give you that direction for at least a couple of days. Today is options expiration monthly. I don't suspect anything crazy to happen. If anything, they'll probably buy this morning dip and push the markets higher. We need to see what happens next week, okay? Have a great day. Enjoy the weekend, and we'll talk to you on Monday.